Good morning, this is Shindo. Well, they are talking about the European banks, especially Deutsche Bank in Germany, again, because it looks as though the catalyst for this inevitable collapse, economic collapse, it looks like is going to be blamed, at least, on the German banks, Deutsche Bank to be specific. Now, there's a lot of people out there, and probably a lot of you who subscribe to my channel, who don't seem to understand that there isn't a new world order coming. The new world order is here. Economically, which is all that really matters, because economics is the catalyst for all this other stuff like war. We are in a world economy. This is a fact. If you want to argue with me over this, you're wrong. We live in a world economy. Now, folks, I am not placing some kind of moral or ethical standard on this. I am telling you the facts, folks. That's what I would hope those of you who have subscribed to me already understand that I do here. I'm not trying to give you some kind of moral here. I don't wrap my message around the American flag and tell you how horrible it is and how the founding fathers would be totally against this, etc., etc., etc. I'm not a truther. I'm not a conspiracy person. What I am is someone who looks rationally and realistically at the news. If you don't like that, then go watch Alex Jones. On this channel, I look at things rationally and don't get wrapped up in a bunch of emotion about it. The fact of the matter is, we live in what you already fear, so many of you. We already live in what you call the New World Order. And the people who are in charge are the people we already know who are in charge. Now, if you like what I do here, subscribe, click like, comment like an adult. And honestly, if English is not your first language, then don't come on here insulting me, because I will make a fool out of you. Okay? Do not riddle your comments with insults. I'm not insulting you, am I? Am I insulting you specifically? No. So don't come on here and insult me specifically. Comment like an adult, and I will respond like an adult, even if you don't agree with me. As long as you don't come on here with a series of word salad insults. Now, this is from Market Watch. The title of this article that I am reading an article. For those of you who do not speak very good English, understand, I am reading an article here from Market Watch. You can find the link to the article in the description box. You can always find the link in the description box, always, on my videos. I don't talk about something and not give you a reference. This is the title. The headline: Deutsche Bank crisis threatens to roil global markets. Europe's problem with some of its largest financial institutions could spill over into the rest of the global market. Could, maybe. We live in a global market, folks. Deutsche Bank shares tumbled on Friday on a report that a group of hedge funds were reducing their exposure to the giant financial institution. In other words, a group of people who are in the business of doing this, buying stocks, are dumping their stock. Earlier in the week, one financial blogger, Wolf Reicher, wrote that deep-seated concerns about Deutsche Bank's ability to raise enough cash to give the markets comfort that it is on sound footing speaks to a larger problem that Europe's embattled banking sector must combat. Reicher, the editor of the financial blog site Wolf Street, said, quote, "The banking crisis in Europe has the potential to transmogrify into a financial crisis." He went on to say, quote, all it takes is for one of the big banks to suddenly topple. The flow of credit would freeze up instantly. In an economic system that depends on credit, and whose lifeblood is credit, such an event is a financial crisis. On Friday, Deutsche Bank shares fell more than 7%, to a record low in Germany after its U.S.-listed shares DB plus 0.87%, DBK plus 2.88% sank 6.7% on Thursday. The move underscores a brutal week of losses for the Frankfurt-based bank. The bank, run by CEO John Cryan, has seen its cost of borrowing steadily ratchet higher as questions about its ability to pay potential $14 billion fine from the U.S. Justice Department, according to the September 16th report from the Wall Street Journal. Against that backdrop, Deutsche Bank's hardest-hit debt securities are so-called convertible bonds, which have plunged in price as worries about its shrinking cushion have intensified. A U.S. dollar-denominated COCO bond with a perpetual duration has been trading around 70 cents on the dollar, MarketWatch Joseph Adelafi writes. And it isn't just Deutsche Bank swooning. A combination of factors continue to dog European banks and Europe's economy. One, the emergence of negative interest rates as central banks employ radical monetary policies to juice growth in Europe has hampered Eurozone banks' ability to make money by eroding profits between their short-term borrowing cost and what they can charge for long-term loans. The German 10-year government bond, TMB MKDE, minus 10Y, plus 25.15%, known as the BUD, was yielding negative 0.15% as of Wednesday. Bond yields fall as prices rise. Also, number two, many banks have been late to restructure in the wake of the 2008-2009 financial crisis that roiled global markets. Number three, Italian banks are saddled with billions of souring loans and are seen as a possible threat to the Eurozone economy. Number four, and many other banks, namely Deutsche Bank, are set to face sizable fines in the fallout from the selling dicey mortgage-related securities, which have further taxed their capital cushions. Boy, that was a problem back in 2008. In the following chart, Riker shows how Eurozone financial institutions have performed since hitting the recent 52-week highs. I will have a link to this in the description box. You can see the chart for yourself. The chart shows that German banks represented in black with a red border have been among the worst decliners. Germany's second largest bank, Commerzbank AG CBK, minus 4.84%, is off 44% from its high, while Deutsche Bank is down more than 60% since its 52-week high. On Thursday, prominent investor and founder of Double Line Capital, Jeff Gundlach, cautioned investors to stay away from Deutsche Bank. Of course, not everyone is fretting about the problem, children of Europe's banking system. Indeed, Cryan denied reports by Focus magazine, citing unnamed sources, that indicated requested assistance from German Chancellor Angela Merkel as he sought to address the bank's fine. In a Wednesday interview in German newspaper Bild, Cryan says the bank doesn't need state aid. However, U.S. markets have been rattled by the recent gyrations in Deutsche Bank's stock price over the past week, with the S&P 500 index down 0.93%, and the Dow Jones Industrial Average off nearly 200 points on Thursday, amid heightened concern about the bank's sovereignty. That's not the only thing, of course, that is causing the Dow Jones to slip, stock market to start to see its sell-off. We'll see what happens today. It's generally not good news, of course. It's not ever going to be good news again. I'll tell you that. It's not when it comes to finance. Now let me tell you something. The reason I started this channel has nothing to do with giving you news. So at the end of this video, you are going to see a little box on the bottom that will lead you to a video. Click on it. The purpose of me doing these videos is not to inform you about something that you should already know, and that is, in this case, the economy is collapsing. My other videos, most of them, are news about the drumbeat of war. So, the economy and then war. Economic collapse and then war. That is what's going to happen, and it's going to happen sooner and sooner. It looks that way, of course. It's going to happen inevitably. It's going to be an economic collapse like nothing this world has ever seen. And after that happens, it's going to be a war like nothing this world has ever seen. You know, I shouldn't say world. I should say age. This world has entered and left many, many ages before. We don't know about